Welcome back to the Pro Ticker Podcast, your Thursday morning edition covering major financial magazine headlines. Everyone, it's March 6th, 2025, and well, the global markets are feeling a bit like a roller coaster right now. We've got Trump shaking things up with tariffs, China making a major economic shift, and Germany on a spending spree.
It's definitely a time of significant change and uncertainty, which can be both unnerving and exciting for investors.
Absolutely. So to help us all make sense of this whirlwind, we're diving into a stack of reports from Bloomberg, The Wall Street Journal, CNBC, and MarketWatch. Ready to unpack this?
Let's get into it.
All right. First up, let's talk about this tariff tempest, as the Wall Street Journal called it. Trump just slapped a 25% tariff on goods from Canada and Mexico, which obviously sent shockwaves through the markets.
Yeah, it's a bold move, and it immediately triggered retaliatory measures from both countries. The markets definitely don't like uncertainty, and this move throws a lot of unknowns into the equation.
Especially since he then turned around and gave automakers a one-month exemption. Is this just a classic Trump negotiation tactic, or is there something more to this?
Well, if we look at his past behavior, Trump has definitely used tariffs as leverage in trade negotiations, but this situation feels different. Granting the exemption suggests he's aware of the potential fallout, particularly for the U.S. auto industry. CNBC reported that the big three automakers, GM, Ford, and Stellantis, had a direct call with Trump just before the exemption was announced. This implies that they successfully conveyed the potential impact on manufacturing, jobs, and ultimately car prices for consumers.
So he's playing hardball,
Yeah,
but he's also leaving the door open for negotiation. Makes you wonder what his endgame really is.
exactly. Is he truly aiming for a more protectionist approach? Or is this a strategic move to renegotiate trade deals in a way that he believes benefits the U.S.? The next month will be crucial in determining which direction this is heading.
And this isn't just about our neighbors to the north and south. Trump also imposed a 10% tariff on Chinese goods, which, as CNBC pointed out, China has vowed to retaliate against. Does this feel like we're on the brink of a full-blown trade war?
The potential is certainly there. What's worrying is the signal it sends to the rest of the world. A shift away from globalized trade towards more regional or bilateral agreements could have a significant impact on the global economy. Remember, these tariffs don't exist in a vacuum. They can create a ripple effect impacting businesses and consumers far beyond the countries directly involved.
It's almost like a global game of chess, with each move having unforeseen consequences. Speaking of global players, let's talk about China. While the U.S. is busy with tariffs, China is quietly making a major shift in its economic model. Bloomberg had a fascinating piece about this, highlighting how President Xi Jinping is pushing to boost domestic consumption.
This is a pivotal moment for China. For decades, their economic growth has been heavily reliant on exports and investment, but they're now recognizing the need to create a more sustainable and resilient economy.
Why the sudden shift? It seems like they've been doing pretty well with the export-driven model.
Several factors are at play here. The trade war with the U.S. is definitely a catalyst forcing them to look for alternative growth engines. But there are also internal pressures. China is facing an aging population and slowing productivity growth. They need to find new ways to maintain economic momentum.
So they're looking inward. But can they actually pull this off? Given the power of state-owned enterprises and local governments, can they really transform into a consumer-driven economy?
It's a massive undertaking, and it won't be easy. It will require a fundamental shift in their economic structure, encouraging more private enterprise and empowering consumers. Think about the potential implications, though. If China successfully pivots towards domestic consumption, it could reshape the global landscape for businesses and investors alike.
It's like they're trying to rewrite the rules of the game. But let's not forget about Europe. Germany, known for its fiscal conservatism, is suddenly going on a spending spree. The Wall Street Journal reported that they're lifting all caps on military spending and creating a €500 billion infrastructure fund.
That's a clear indicator that investors are recognizing the potential growth in the German defense sector. This move could have a ripple effect across Europe, prompting other nations to increase their own military spending. We might be witnessing the beginning of a European defense boom.
It's fascinating how these global events are all interconnected. What happens in one part of the world can trigger a chain reaction across the globe. But let's get back to the markets for a second. With all this happening, are we staring down the barrel of a recession?
There's definitely a lot of nervousness out there. The Wall Street Journal ran a piece titled "The Recession Trade is Back on Wall Street," which pretty much sums up the sentiment.
So are investors right to be worried? What are the signs they should be watching for?
There are some key indicators that can provide clues. Consumer confidence, manufacturing activity, and employment data are all important metrics to track. If we see a significant weakening in these areas, it could signal a potential recession.
And just to throw another wrench into the mix, the European Central Bank is expected to lower interest rates again for the sixth time since June, according to MarketWatch.
The ECB is walking a tightrope. They're trying to stimulate the economy without fueling inflation, which is a delicate balancing act, especially with all the other uncertainties in the global economy.
It sounds like they're trying to navigate through a minefield of potential problems.
Precisely. And their decisions could have a ripple effect, impacting everything from currency exchange rates to investment flows. It's definitely a situation to monitor closely.
All right, so we've got tariffs, economic pivots, spending sprees, and interest rate cuts. Is there anything positive happening out there?
Well, amidst all this turmoil, MarketWatch reported that retirement savings are showing positive trends. It seems people are still focused on their long-term financial goals, despite the market's recent volatility.
That's actually encouraging to hear.
It is. It shows that people are still investing in their future and have confidence in the long-term resilience of the economy. And speaking of positive trends, CNBC highlighted the fact that Kuwait's stock market is outperforming its Gulf peers, thanks to some promising economic reforms they've implemented.
So there's some glimmers of hope out there, but it definitely feels like we're in uncharted territory.
We are, and that's why it's more important than ever to stay informed. Understand the forces at play and make strategic decisions based on your individual circumstances and risk tolerance.
His words. All right, let's dive into a topic that's always buzzing, crypto. MarketWatch reported that Trump's first White House crypto summit is happening this Friday, but some analysts are saying it might not move Bitcoin's price as much as people expect.
Yeah, Bitcoin's price has always been notoriously volatile, influenced by everything from regulatory news to general market sentiment. The summit itself is significant, though. It shows that the government is taking digital assets seriously and wants to establish a clear regulatory framework.
That makes sense. So what are the key issues they'll be grappling with at this summit?
Well, one of the biggest is stablecoin legislation. Stablecoins are cryptocurrencies pegged to a stable asset like the US dollar. They're seen as a potential bridge between traditional finance and the crypto world. But there are concerns about their stability and potential impact on the financial system. MarketWatch pointed out that clear regulations could make stablecoins more appealing to institutional investors, potentially bringing much-needed stability to the crypto market.
Speaking of the broader crypto landscape, MarketWatch also mentioned that Trump's proposed crypto reserve includes not just Bitcoin and Ether, but altcoins like XRP, Solana, and Cardano. What does that tell us about how the government is viewing the future of crypto?
It suggests they're recognizing that the crypto ecosystem is much broader than just Bitcoin. This could lead to more tailored regulations for different types of crypto assets, fostering innovation while mitigating risks. It's almost like they're acknowledging that crypto is here to stay and trying to figure out how to integrate it into the existing financial system.
It definitely feels like a pivotal moment for the crypto world. Now let's shift gears and talk about something a bit more traditional, oil. The Wall Street Journal had an interesting piece on Argentina's Vaca Muerta shale basin, which is attracting a lot of attention from energy companies.
That's right. As U.S. shale oil production growth has plateaued, investors are looking for new opportunities. Vaca Muerta is one of the few shale oil regions with significant production growth potential.
But the Wall Street Journal also pointed out that Argentina has a history of political and economic instability. That can make investors hesitant, right?
Absolutely. Argentina has seen dramatic policy shifts in the past, which can make it a risky bet for investors. However, the current government is implementing pro-business reforms, which could create a more favorable environment for energy companies. It's a delicate balance between risk and reward.
So, a potential gold mine, but with some potential pitfalls as well. Now let's talk about something that's literally out of this world, satellite internet. MarketWatch reported that shares of Starlink's main European competitor, Eutelsat Communications, have tripled. Apparently, talks with European leaders to replace Starlink satellite services in Ukraine have intensified.
This is a fascinating development, particularly in the context of the geopolitical situation. The fact that European leaders are looking for alternatives to Starlink. A U.S. company suggests a growing desire for more autonomy and control over critical infrastructure.
And investors clearly see the potential. Eutelsat's CEO claims they can provide the same services as Starlink in Ukraine. And the market seems to believe him.
The demand for satellite internet is only going to increase, especially in regions with limited terrestrial infrastructure. If Eutelsat can successfully position themselves as a reliable alternative to Starlink, they could capture a significant portion of this growing market. It's definitely a company to watch.
It seems like every corner of the global economy is undergoing some kind of transformation. From trade wars and economic pivots to technological advancements and geopolitical shifts. It's hard to keep up with it all.
That's why it's crucial to stay informed and understand the underlying trends. It's not just about reacting to the headlines, but about anticipating the potential consequences and making strategic decisions accordingly.
Wise words. So for our listener, what are some of the key takeaways from all of this? What should they be focusing on as they navigate this complex landscape?
It's a time of both challenges and opportunities. I think the key takeaway is to stay flexible and adaptable. The world is changing at an unprecedented pace, and those who can anticipate and respond to those changes will be the ones who succeed.
So it's not just about riding out the storm, but about finding ways to navigate it and even capitalize on the shifts that are happening.
Exactly. Look for the emerging trends, understand the motivations of the key players, and assess the potential impact on your own investments and financial goals. For example, we've seen how Germany's increased military spending is creating opportunities in the defense sector.
Right. And China's shift towards domestic consumption could create a whole new market for consumer goods and services.
Right.
It's like the global chessboard is being rearranged, and we need to be thinking a few moves ahead.
Precisely, and don't underestimate the power of technology. We talked about the growing importance of cryptocurrencies and the potential of satellite internet. These are just two examples of how technology is disrupting traditional industries and creating new investment opportunities.
Yeah, it seems like every week there's a new technological breakthrough that has the potential to change the world. It can feel overwhelming at times, but it's also exciting to be a part of this dynamic landscape.
It is. And remember, knowledge is power. The more you understand about the forces shaping the global economy, the better equipped you'll be to make informed decisions.
So what's your advice to our listener? What are some concrete steps they can take to navigate this volatile environment?
First, don't panic. It's easy to get caught up in the headlines and make emotional decisions. Take a step back, assess your own risk tolerance, and make sure your investment strategy is aligned with your long-term goals.
So don't throw out your plan just because the market takes a dip.
Exactly. Volatility is normal. It's part of the cycle. Second, stay informed. Keep up with the latest news and analysis from reputable sources. Don't just rely on social media or sensationalized headlines.
Do your own research. Dig a little deeper.
Right. And third, diversify your investments. Don't put all your eggs in one basket. Spread your risk across different asset classes, geographies, and sectors. This will help cushion the blow if one particular area underperforms.
So a mix of stocks, bonds, real estate, maybe even some crypto or commodities.
Exactly. And as always, it's wise to consult with a financial advisor to get personalized advice tailored to your specific situation.
Great advice. It seems like we're living in a time of unprecedented change and uncertainty, but as you said, with change comes opportunity. It's all about staying informed, adapting to the new landscape, and making strategic decisions that align with your long-term goals.
Well said. And remember, the journey is just as important as the destination. Enjoy the ride, even with its bumps and turns.
That's a great way to look at it. We'll see you all tomorrow morning with new headlines from major financial magazines.